Commerce Secretary Howard Lutnick announced that the Trump administration's decision to temporarily exempt electronic devices like smartphones, iPhones, and laptops from tariffs is only a short-term relief. These products will face separate levies in the coming months, adding more complexity to the already confusing rollout of tariffs on Chinese goods. Lutnick clarified that although electronics are exempt from reciprocal tariffs, they will be included in upcoming semiconductor tariffs, which could be imposed in the next couple of months. President Donald Trump also addressed the confusion, posting on Truth Social that no product received a permanent exemption from tariffs. He reiterated that these electronics would still be subject to the existing 20% fentanyl tariffs and would be moved to a different tariff bucket. Trump criticized the media for what he called misinformation, accusing them of refusing to report the true status of these tariffs. The tariff exemptions on electronics led to mixed reactions. Analysts at Wedbush Securities saw the move as positive for tech investors, as it provided a sigh of relief for major firms like Apple, Nvidia, and Microsoft. On the other hand, Massachusetts Senator Elizabeth Warren criticized the shifting tariff policies, calling the situation chaos and corruption. She argued that such unpredictability would discourage investments in the United States, as it would be impossible for businesses to understand the rules going forward. While some economists, like former Treasury Secretary Larry Summers, warned that these tariffs could be disastrous for U.S. competitiveness, employment, and inflation, Trump's administration has continued to insist that tariffs will ultimately strengthen the U.S. economy by boosting manufacturing and protecting jobs. Trump's senior trade advisors, including Peter Navarro and Kevin Hassett, have emphasized that tariffs are a necessary tool to address unfair trade practices, despite concerns over their negative impact on businesses and consumers. The late Friday announcement regarding tariff exemptions and the confusion surrounding them have led to significant market volatility. U.S. stocks experienced sharp declines as investors feared the effects of a potential trade war. However, Trump's tariff policy, which has consistently aimed to impose maximum pressure on China, has also been marked by moments of flexibility. In his recent statements, Trump mentioned that there could be carve-outs for certain countries, indicating that the process could still evolve. Trump's tariff strategy has often involved threatening maximum pain and then delivering a less harsh version of the promised measures, a tactic that seems to be part of a broader marketing effort. For example, while he had initially threatened sweeping tariffs on all Chinese goods, he has delayed their full implementation and adjusted specific measures in response to public concerns and market reactions. Despite the ongoing uncertainty, Trump's administration is sticking to its goal of using tariffs to level the playing field, particularly with China, which it accuses of unfair trade practices. The U.S. and China have already engaged in a tit-for-tat exchange of tariffs, with China imposing the 34% tariff on all U.S. imports in retaliation. This escalation has raised fears of further damage to the global economy and worsened trade tensions between the two largest economies in the world.